Happy Friday, everyone. Welcome to another episode of Cass's Financial Outlook. I am your host, Cassandra Collin, and today we are going to keep it short and simple. Today we're going to be covering a little bit more on how to file depending on how you're filing, whether you're doing single, married, or married filing jointly, married filing separately. We're going to cover a little bit of the differences between those. So, as our normal disclaimers, this is not financial advice, and I am not a financial advisor. This is coming directly from the irs.gov website, and this is pretty much just my outlook on how you would be able to file depending on what you qualify for. So, as of 2023, these are the tax breaks for single taxpayers. So, the tax rate would be a 10% on your taxable income from $0 to $10,275. Now, the next tax break is 12%, and it would be taxed if you make anything between $10,276 up to $41,775. And you get a 22% tax rate for incomes of $41,776 up to $89,075. Then 24% for $89,076 up to $170,050. 32% on $171,051 up to $215,590, and then a 35% tax break for $2,150. And then a 35% tax break for $215,591 up to $539,900, and then a 37% tax break for $539,901 and up. So pretty much anything that's $539,901 will be charged at a 37% tax break and above. So this is for single taxpayers. So if you're filing as a single individual for 2023 tax breaks, that's how you will be taxed. Now, here's how it works. It's not going to be a total amount being taxed at just that specific rate. So for example, if you make $150,000, you will not get taxed 24% for the entire amount. What you will be taxed is from $0 to $10,275. That's going to be taxed at 10%. Then anything above $10,275 and up to $41,775 will be taxed at 12%. And then anything after that will be taxed at 22% up to $89,075. And then above that will be taxed at 24% until you get to the point of $150,000. So that's how the tax breaks work for single individuals. And that's pretty much the same thing for married couples that are going to file jointly. The only difference is the amounts in your tax breaks. So for example, the tax rate for married couples filing jointly, that's going to be charged at a 10% rate up to the amounts of $20,550. So it's pretty much almost double. And then 12% will be charged at $20,551 up to $83,550. So I know these are a lot of numbers, but pretty much if you go to the tax breaks, you will be able to see which tax rates you will be getting depending on the income you have. And some people prefer to do it married filing separately because of the different forms that they use at the end of the year. So if you're a W-2 compared to a 1099, then your tax breaks will obviously be different. Now, since we did cover in the last episode on how to have lower taxable income depending on the deductions that you have, even if you're a 1099, that doesn't mean you're going to have a ton of taxes that you have to pay for at the end of the year if you have tax write-offs, like if you have things that you're buying for your business, or if you're having business meetings, business trips, whatever it is that you have, and you can write those off, then your taxable income obviously changes. So if you had a $50,000 gross year, your taxes will be different compared to somebody who has a $70,000 W-2 income, because again, they're already getting taxes taken out of their paychecks. So again, depending on which one you have, you might want to consider whether you want to do it married filing jointly or married filing separate. And obviously, if you're a single individual, then you do have to file as a single taxpayer at the end of the year. Well, now at the beginning of the year, before April 15. April 15 is the cutoff date to file your taxes. So, a couple of things to understand if you are going to be filing as a married couple. So, for new married couples, if there is a name change or an address change, this does need to be reported. So when you have a name change through marriage, it's important to change it in the Social Security Administration, because the name on the taxpayer return must match what is filed on the SSA, the Social Security Administration. If it doesn't, that could delay your tax refund. So it's important to update that information, and you can file a form called SS-5, and that's basically an application for a Social Security card, and it's available at ssa.gov, or you can also call the local number. The local number, if you didn't know, is 800-772-1213, or you can also call your local SSA office. Now, the other thing is if there is going to be an address change, then obviously you want to make sure you update that in the IRS website and the postal services. They also need to know. If you didn't know, you can go to USPS.com and you can actually pay $1 if you don't want to go in person. In person, it's free if you go and forward mail to yourself to the new address, but if you want to just do it online, it's $1. You actually get to put the old address and what the new address will be, and they will forward all that mail to the new address. You can also fill out a form with the IRS, and it's the 8822, which is the change of address form. That way there is nothing that's going to interfere with your tax refund. Now, the other thing you also have to keep in mind when you are filing as a married couple is married individuals should consider changing their withholdings, because when you're a married couple, you do have to fill out with your employers a W-4 form. So this is an employee withholding allowance, and you do have to do that typically within like 10 days of starting a new job. If both spouses are working, they may move into a higher tax bracket, which again, we just covered right now, because if you're an individual, the tax brackets are different compared to those who are married. You essentially get double the amount in your tax brackets. So this does affect your Medicare tax. So again, make sure that you are filling out the W-4 form, and you can see Publications 504 in the IRS website, which explains more in regards to the tax withholdings and estimated taxes for those who are married couples. Now, again, you can choose to do your taxes separate even if you're married. So while filing jointly is usually more beneficial, it's best to figure out in both ways. So you can estimate both ways to see which one works best for you. And when we say which one's best for you, it means which one allows you to have the most bang for your buck. So which one helps you pay less in taxes, or which one helps you get the most out of your reimbursements. So again, remember that as a couple, you have the option to choose filing jointly and separate, but you do have to file as a married individual. Now, that's a little bit in regards to checklists that you must have as a married couple. And with married couples, so the thing with married couples is common law also counts as married filing jointly. So if you have been with somebody for 3 years and you've been living together for 3 years, that counts as a common law act, meaning that you are considered a married individual in the eyes of the government. So you do have to file as a married couple in your tax returns. So keep that in mind. Even if you're not married, common law does consider you as a married individual because you have been together and living together for X amount of time. There's a couple of states that recognize common law, not all the states. So taxpayers who live together in a common law marriage, these different states are the ones who recognize a common law marriage, which the following are Alabama, Colorado, District of Columbia, Iowa, Kansas, Montana, Oklahoma, Pennsylvania, Rhode Island, South Carolina, and Texas. So that is more in regards to taxpayers who are going to be married filing jointly. So taxpayers who are also living apart but are not legally separated, you still have to file as a married individual. And obviously there you can consider doing it jointly or separately, but you have to file as a married individual. Also, taxpayers whose spouses passed away in that year, they have to still file as married jointly because, again, during the year of 2023, they were still considered married. If you are going to be filing married, then both husband and wife are responsible for any tax owed if you're doing it jointly. Now, the lowest taxes rate apply to the married filing jointly status. So the advantage about married filing jointly is that this has the lowest tax rates being applied to it. So that's one of the advantages of filing jointly. But again, you have the opportunity to still file separately or as an individual, depending on where you fall under. But that's a little bit more in regards to the different tax brackets, whether you're single or if you're married. And it kind of gets a little bit trickier depending on if you have children and who's going to claim them as dependents. So that is a little bit in regards to the different tax brackets and the different taxpayers that we have. So again, thank you for tuning in at Cass's Financial Outlook. Today, we just wanted to keep it short and simple on the different tax brackets and the different taxpayers that we do have. There's actually 5 different taxpayers, but we're not going to go over into too much detail into that right now. Today, we only wanted to cover how to file as a single individual, or essentially what the tax brackets are for single individuals and the tax brackets for individuals who are married. And you have the ability to do jointly or separately, depending on which one works best for you and your family. And again, that's all about your tax brackets because, again, some people might have W-2s, some people might have 1099s. Withholdings are different for everyone. So again, get with your CPAs, get with your tax advisors, depending on where you fall under. Make sure to talk to different people. Don't just go to one person and let them tell you that that's the only way to file your taxes. You might want to get advice or reassurance from different people depending on your case and your scenarios. So again, I am not a tax advisor and nor am I a financial advisor. My tax bracket is different from you guys, but thank you for tuning in on Cass's Financial Outlook. And if the numbers overwhelmed you, so sorry. But again, these are numbers that are important when you come and file for your tax return. So we will see you at our next podcast. And don't forget to like and subscribe to our YouTube channel. Don't forget to listen to us on Spreaker, Spotify, all the podcast platforms we're on. Don't forget to leave us a review. Again, 5-star preferred, but I would definitely love to get your genuine feedback. Definitely comment on our sections in our YouTube channel to let us know what other topics we should be talking about, what are the topics you want to listen to, what are the things we should dive deeper in. Usually I go in and do the research for you guys to give you the information. Again, this is coming directly from the IRS website, so you can definitely go to the irs.gov website and search it up on your own. But for those of you guys who like to just listen to the information, we can totally do that. And you just can comment down below which topics you want us to talk about. So again, we will see you at our next podcast. Have a wonderful day.